We've got Madan Sabnavis, who's chief economist at Care Ratings, right here with us in the studio. Now, Madan, the trade deficit widening, and at the same time, the Trade Ministry, somewhere confident that export growth in the current financial year will hold up at levels of, maybe 15 to 20% growth. Do you see that as coming through smoothly, or do you believe on the export growth front we could see challenges which in turn can weigh on the trade deficit?
No, I think the picture for exports in fiscal 12-13 will tend to be a bit more moderate than what we saw last year. But there are a lot of comforting facts for us to really believe that this number of around 15% growth over and above the growth of 20% which we got last year is achievable. Because one major transformation which we have seen in the overall pattern of our exports is in terms of composition of commodities as well as destinations. I think destinations is probably a more important factor because in the earlier years we saw that the Euro region and the US were the major markets for our exports. Now there's been a kind of transformation which has taken place, and we have over 50% of our exports actually coming from the Asian regions. And given the fact that most of the Asian emerging markets are going to be the drivers of the world economy in the coming year, so I'm fairly hopeful that Indian exports will be able to stand up to the kind of challenge which we have, given the fact that the overall global economy is not going to do too well. And we're talking really of a recession in the Euro region, a kind of a marginal recovery in the US region. So on the whole, I think something like 15% looks achievable as of today.
Right, Madan, afternoon. If we look at some of the comments from the finance minister of late, he's blamed the volatility in the global commodity prices for currency depreciation and said that it's the deteriorating balance of payment situation in Asian currencies which has also put stress on currencies. How much would you attribute it to those factors?
No, I think if you look at the way in which the rupee has been moving, there are two sets of factors which have driven it. One are the basic fundamentals when you're talking of a balance of payments. But if you actually look at it in a very analytical manner and say that what finally should be driving the rupee should be the increment or the decrease in the foreign exchange reserves. Now, ever since March, we have seen that the rupee has been depreciating quite significantly. But if you look at the foreign exchange reserves, the kind of depletion in foreign exchange reserves have not really been that significant to justify this kind of depreciation. So my sense is that it's been overall the sentiment which has militated against the rupee, as well as the fact that the FIs were withdrawing in a very marginal basis. It was not really a major withdrawal, but definitely FI inflows on a day-to-day basis had turned negative. And these were the factors probably on account of GAR, for which we have gotten certain clarifications yesterday. So this is the factor which has actually driven down the rupee. So I think things are going to stabilize as we go ahead in say the next couple of weeks.
And Madan, where do you see oil prices going? Because we did see them drop to a 4-month low yesterday. They've climbed back since. Again, there is this view that you will have an average price of close to about $120 a barrel for the current financial year on oil. Do you see that as likely, or do you believe we should prepare for shocks on the oil price front where we could possibly go to even as high as $130?
No, I think oil is something over which I think is very difficult for one to really conjecture correctly, because there's one thing of the fundamentals where we talk of the demand and supply forces. Now, supply actually is never an issue as far as oil is concerned. But demand definitely is something which depends upon how the global economy behaves. Now, going by what the IMF has said, there's going to be a very gentle recovery in the global economy, a recession in the Euro region. The US has enough stocks, so therefore, from the point of view of demand outstripping supply, I don't really see much of a problem out there. The major issue, of course, could be Iran, the geopolitical tensions which are there, over which I think is very difficult for one to conjecture. Anything could really happen. But as of now, given the fact that we're almost 4 months through this calendar year, it appears that things appear to be fairly stable. And talking of something in the region of 110, 120 may not really be out of place.